Good morning, gang. Good morning. Welcome to this week's altcoin update. First and foremost, big shout out to Prime XBT for sponsoring today's stream. If you don't know who Prime are, it's a platform where you can trade crypto, forex, commodities, and stock indices. And if you use our links and our codes down in the description, you can get up to a 7,000 USD deposit bonus. And you can also get 25% off trading fees if you use our second code alongside it. Right, so once again, thanks Prime. Remember, everything discussed today is not financial advice. I'm not a financial advisor. This is just my view of the market. And it's for educational purposes only. Right, now all that's been said, let's play catch up from last week, shall we? Because obviously the market's moved up, the market's moved down. There's a big rotation going on with some altcoins. Oracle seemed to be the flavour of the week. So, yeah. Obviously, last week we were looking at Link, and at the time we were down here. This is the 4-hour chart. Let's have a look exactly where we were. Where was last week? Well, in fact, we're hovering down here, if memory serves. And we were looking, saying, there's a bit of a screenshot. What we're saying is this a deviation outside of the value area, as it was at the time, and if it is, then reclaim back into value, and you've got a long trigger there back up into the point of control / EQ, and obviously that's what's happened. We got back in, and we didn't get a retest, especially not on the daily time frame. I'm not sure if we got one on the lower time frame. Full disclosure, I didn't take this trade because I've got no interest in trading alts at the moment. But yeah, straight in, up to the point of control, nice rejection, pull back, and then up into the EQ, and this is where we're hovering around right now. So, continuation from here, we'll be looking up at this value area high if it does get continuation. If it gets continuation further than that, then be looking up into this cluster / the range highs, maybe for a deviation of the range highs, swing failure pattern and back in. And that's obviously if it doesn't get a rejection down here. If we get a rejection here and it loses the point of control, in fact, we can probably pull that point of control on, that volume profile on a little bit further. Here we go. If we don't get if we get a rejection here and then we lose the point of control, then once again just looking back down at this value area low first and foremost. If not, overall range low, and like we were saying last week, it'd be nice to see a swing failure pattern of these lows, bit of a stop hump. And obviously, if you want targets lower down, if it does continue to break down, then watch last week's video. I'll leave a link at the end of this one. The other two we looked at was Mana. Let's get this on. Mark this on the daily. So no real change from Mana, because last time we were still hovering down below this value area low, and that's where we are now. So same plan as last time. If we get a reclaim back into this value area, then I'll be looking to target these highs, and if it does get above those highs and continues, then again looking at the point of control. If it breaks down, then again watch last week's video and you'll see initially we were looking at this consolidation here, and if it doesn't stay within that, then I'll be going back down to these value area highs of this old range, the accumulation range. XRP is effectively exactly the same. Last week we were bouncing off the point of control. Is this a bounce that could take us higher? Yes, it could. Again, be targeting these highs here, these highs and these highs. If not, looking back down at its point of control, lose that, then there's a drop. Obviously, you've got this cluster here, like we said last week. Lose that cluster, then back down the overall value area low. Very simple. There's not been much movement on XRP. There's not much movement on Mana, but obviously a Link, one of the oracles, has had a decent play. So we'll just, we'll see how long this rotation lasts. It's just altcoins. It works in rotations. So yeah, this week, we thought we'd take a look at Sol and Ape because it's been highly requested. By the way, gang, if you guys want an altcoin covering next week, then leave a comment down in the comments below. Let me know what pairs you want to look at, and obviously the most popular ones, then we'll take a look and we'll do some charts. So Sol, obviously there's a lot of news, a lot of FUD, whatever you want to call it, to do with Sol and ties to FTX or whatever, and Bitboy's going a bit crazy and stalking people in the Bahamas, whatever you want to call it. But we're still just trading the charts. We don't care about the news, we're trading the charts. So yeah, First things first, quick observation. Obviously, anyone that's looking at this is going to go, "Oh, it's head and shoulders." Could be, but you know, the head and shoulders. If it was a head and shoulders, then that technically would have been your neckline. So yeah, but patterns like head and shoulders, it's not something that we trade in the group. You know, be aware of them, yeah, but I'd prefer to get way better entries than relying on a breakout trade of the neckline. And obviously in the group we teach how to trade patterns like head and shoulders, and it's not like you'll see all over the internet where, you know, they trade the breakout of the neckline. Right, so what could we do? Well, first and foremost, let's do what we always start off with. Let's throw on a volume profile of the overall volume. We can see here, obviously, value area high, value area low, point of control. Now, this is obviously the whole history. Now, there might be other charts that go back beyond April 2020. But for now, you know, the Binance chart is good enough for me. And we can see that obviously we've broken back into value. Now, obviously, we have halted around this cluster here, which is to be expected because obviously we do have a little spike in volume here. It's pretty obvious just from looking at the candlesticks. If this holds, then quite simply, I'd be looking for a push up back towards the value area high. In this instance, you're looking around 1923-ish. Get above that, get acceptance back in, and you're back up to trading up towards targeting these highs. Okay, obviously that's a big if. As it stands right now, so look at that. You know, that'll be a near as damn it 200% move. So that's a big if. You know, I'm not saying it can't happen, but obviously we're playing on probabilities here. So obviously that's first and foremost that we're looking at. If we do break down from here, and price does continue to tank, then let's zoom into the weekly and let's take a look at this. Well, we can see here, again, looking at the volume profile of the overall area, we can see that the volume really starts to tick out within this sideways range here. So it's pretty obvious to see. So what I'll be looking at, if price does break down, and bear in mind this is obviously quite thin, this is obviously looking on the weekly time frame, this is quite thin, but realistically, I'd be targeting this range. Let's hide this volume profile for now. In fact, we'll just remove it, full stop. So that's what I'll be targeting at. Obviously, we're looking on log scale here. This is obviously out of log, but just so we can get a good clear picture, we'll be looking at this here. And if we throw a little volume profile on this range itself, then we can see, obviously we've got the value area high coming in here at around 320. We've got the EQ coming in here around 250. Nice round number. 177 for the point of control, and obviously the value area low lines quite well with the overall range low. So that's what I'll be looking for. Obviously, if we do end up folding and coming over, I'll be looking first and foremost somewhere within this region. And zoom out to the monthly. Let's take a look at this. Yeah, that looks quite nice. Back to the weekly. If this didn't hold, then I'd be looking back down here around this EQ / this value area high here. So it's a bit of a zone. And obviously if that doesn't hold, then ultimately you're looking back down at these range lows here, which effectively if that doesn't hold, then, you know, the shitcoin's really going to hell. And back down into this initial cluster. So that's what I'd be looking at. I'd be level to level. Quite simply. And how I'd be trading this is you're looking for a reaction. So if it comes down here and you get a nice change of market structure, get a nice bounce, then you'd be looking for longs. Okay, if you get no reaction down here and price just melts straight through it, bear in mind I'm not the sort of trader that leaves limit orders down here hoping and praying that this is going to work, and you know, we've talked about that many times on the channel. If it gets no reaction here and it just goes straight through back down to this region, again, you're looking for that change in market structure, ideally on a higher time frame if you can. But obviously if you're looking on lower time frames, then it's a lower time frame play. You know, if you see this market structure change, I mean this is the weekly chart right now, but if you see a market structure change on the weekly, then you know you might be looking at a longer term hold. But again, we're still in this downward trend. You know, we've not broken out of this yet. So any positions that you are taking, you know, any longs that you are taking, you're taking regular profits. And all you do is you take profits. So you see price pump up. Say you know you've got a key level here, and you get price moves up in a decent uptrend, and you get into this key SR level here, and you get a pullback, and then it breaks through. Well, you got to think about this. If you are long from either down here or you're long from here, then you're certainly going to be taking profits here because this is a key level. And then you see the pullback. Now, if this doesn't pull back and then change market structure to the downside, and it continues this up structure, then all you're doing is you're waiting for it to break through that, you're waiting for a back test, and then you just add back into your position, and then you trail your stop loss up with it. That's a strategy in itself. That's how you trade an uptrend. But obviously right now we're being cautious because obviously we're in a downtrend, so the first sign of an uptrend, you've still got to be cautious about it. It doesn't necessarily mean just because you get a small little uptrend, it doesn't mean that that's it, it's bull market back and we're off to the moon. We're still playing cautious. See a consistent uptrend, and you know you can start playing things a little bit differently, but for the time being that's how you do it. Take profit at a key level. If it does break through that and you get a breakout and everyone starts screaming breakout and it gets a successful back test without failing, you just add back in, and you just keep doing that. Take profits, add back in, take profits, add back in, and that's, you know, that's how you play a trend. You know, same with the downtrend. Exactly the same, just in reverse. Okay. So once again, if it gets reaction there, looking for longs. If not, then ultimately I'd be, you know, just playing this as an overall range. Okay. So that's Sol. Fairly straightforward, in fact. Next, what have we got here? Ape. Oh, we didn't talk about to the upside. Oh, we did talk about to the upside. We'll be taking out these highs here. Out of interest, while we're on this. Yeah. Ape. Well, that's a sexy looking chart, isn't it? Said no one. Right, okay. Weekly. Downtrend. Monthly. Downtrend. Daily. A nice curved bottom here. Again, still in a downtrend. You have got a slight uptrend here on the daily. But overall within structure. Yeah. So, first observations of this would be it's a range. Let's throw this back out and look. In fact, let's click this correct, shall we? There we go. Let's extend these left so we can see. Yeah, we've got a nice range there. So we can see price came back down, came into this range, tapped the EQ, back out, back into the range, retested the high of the range, the low, the EQ, the high, and you know you got respect, really good respect there. So let's zoom this into the 4 hour now so we get a clear review. Yeah, it's a great range and environment. So obviously what we've just seen here is we've just seen a stop run of these lows, which makes perfect sense. And if we just throw on a volume profile of this range, it's where officially we broke into it. We'll see, yeah, this is great. This is ideal. Right, so here we go. So right now, obviously, swing failure pattern or a deviation of the lows. Come back up into the value area low. Now we're seeing if we're getting acceptance into this value region. If we do get acceptance into this value region, then we can be looking up at the EQ / point of control because it lines it really nicely. And the beauty of this EQ is what you could see is we could see price come up, take out these highs, back down, and you got a short trigger. So that'd be one option. If it continues up higher than that and manages to reclaim this, then I'll be looking up at this value area high, which in turn would take out these highs. So if that happens, then take out these highs, hit this value area high, back down, and you got a short trigger. Again, targeting back down here. If no reaction there, then you're looking overall at these range highs. Let's just get rid of some of this, clear up the chart, can't stand the messy chart. Yeah, and if it continues up, then targeting the range highs, what would be nice again is just to see these highs taken. Doesn't have to do it, you know, it could just come back up and get a reaction and back down. Or obviously deviation. Again, even if this is the start of a new uptrend, you've still got to play cautious. Like we just said then on Sol, you know, if you get a new uptrend starting, it's absolutely fine. Just make sure we're locking in profits and then we're adding back in as we see the continuation. That way, if we don't see the continuation, at least you've paid yourself, and then price, if it does reverse on you, it's not the end of the world because you've just made profits. Okay, it's just all about locking in profits, quick early profits when you're in a bear market and you're taking longs against the trend. If we go back out to the daily, so we'll look at this. So yeah, realistically, you'd be looking at this high getting taken off and a strong daily close above that to try form, you know, this is a continuation. So we'll look at this on the weekly. Yeah, same idea again, taking out the last highs before the new lows. So yeah, that's what you'd be looking for, and that's obviously if you're wanting a bullish outlook. To the downside, there's not much beneath. Let's get rid of this range. In fact, we'll keep this range on, and let's just take this volume profile back to the whole area. I mean, look at that. It's just great. And this is why people say, why do you use volume profiles? Well, because you see where the volume is. I mean, look at that. You know, deviated out of the main range, like we've just said, and we've come into the overall value area low. You know, this is the power. You know, if you're not using volume profiles when you're charting and you're trading, you're missing out on effectively the cheat code. Obviously, if you want to learn how to use these, then, you know, check out his website. We'll talk about it at the end. If this level's lost and we do get this rejection and we come back down here and we continue going down, then because we've not really got any history before this, then realistically your logical target would be down there, roughly around $1. Nice round number. You know, could it go lower? Yeah, it could go lower. But you know, you'd be hoping for some sort of reaction down here. Yeah, straightforward. It's level to level. It's not a difficult environment once you know how to lock in profits and you're not over trading and you're not just got your up only mindset. It's not a hard environment, isn't it, a bear market? You know, if you can learn to trade a bear market, then you can trade any market. Yeah, that's it for the downside. Obviously, we've got no more history, so it's anyone's guess on the downside. You know, your project could collapse completely. It could shut up shop. It's, you know, it's not unheard of with shitcoins. Everything's a shitcoin. Okay, so that's it. So obviously that's Sol, that's Ape, and obviously that's the recap from last week. If you want to learn along with us, then don't forget to check out our website, spitfiretraders.com. On there, if you do sign up, then you can get access to our private course, which covers now over 70 hours of content. Everything from, I mean, this is Elliott Wave Theory. You know, you've got your absolute beginners through to advanced trader. There's hours and hours and hours of content on here, straight to the point, no bullshit. And you'll also get access to our chat and chill live streams as well, where I mark out my high time frame swing trade ideas, and I also go down to the low time frame as well and talk about range plays and obviously anything that's happening right now. Obviously on our website you can also click through to our free Discord, where if you're in our free Discord, you know, the amount of alpha that's shared in here, it's unreal. And obviously if you do sign up to our members program, then you get access to the co-pilots area, where you get me in real time telling you what I'm thinking about, what areas I'm looking at, where I'm looking to take longs, where I'm looking to take shorts. It's not a signal service, but obviously if my ideas line up with your ideas, then it gives you a little bit more confluence. Once again, thanks to Prime for sponsoring today's stream. If you've enjoyed today's content, don't forget to hit that like, consider subscribing, and hit that bell notification so you don't miss another video. Alright guys, that'll do. As you were, bye bye.